Hey guys, what's going on? Welcome back to the channel. In today's video, I want to go over lifestyle expenses and how they affect you getting pre-approved to purchase your property. That's right. The reason I'm doing this video is because over the past 11 years, I've had the opportunity to work with entertainers, athletes, some folks who just started a business and all of a sudden it did really well. And it's all great, but oftentimes when people make a good chunk of money, they're a little bit frivolous in the amount of their expenses, all right? They think some of these rules don't necessarily apply to them. And it does come back to haunt you when you're trying to get approved for a home loan. And so in this video, I casually wanted to go through, run some numbers for you so you can get a feel of what it would look like if you decide to go and purchase a vehicle for $500-600 a month, all right? Those type of liabilities, they hit your income really hard, and what it does is it actually offsets your ability to get a higher loan. And so you might think that's not really a big deal, but it actually does eat up a good chunk of your income. So let me demonstrate that for you. If you're trying to capture that information, then you're watching the right video. My name is Zevi Shafran. I own a mortgage company. It's called Lonebrook Inc. in Woodland Hills, California. I've been doing this for well over 10 years. So with that, let's get started, all right? Let's assume for a second that you're in the market to purchase a property, and let's just say it's a home and not a condo, because condos have homeowner associations. And I'm in Los Angeles, so I'm gonna be pretty conservative here for a minute. I'm going to make two charts, and the reason I'm going to do that is simply because I want to illustrate to you what it would look like if you actually had a large car payment. Like, how much of your income would that actually eat up in the process, okay? So what we're going to do is we're going to assume that you're buying a property for, let's just say, $700,000. Okay, and we'll just assume for a second that you're putting 10% down. That's your down. And so you're gonna have basically a loan amount of $630, okay? And this is gonna be your loan. So we're gonna run that scenario for a minute, and we can basically do it on both sides. I'm going to use my financial calculator for a second so we can run some numbers. So if I was to get a loan for $630,000 with 10% down, that means that because I have less than 20% down, I still have mortgage insurance, all right? But the payment on something like this, and by the way, if you're ever curious, you could do the same thing by going to my website, which is www.lonebrook.com. You'll see resources and calculators at the top. Just click on calculators, and then you can pull up a amortization calculator, basically is what it is, all right? So looking at a payment of $630,000 based on today's market, which is around 7%, I'm gonna say that the payment is gonna be $41.91, all right? I'm just going to use round numbers. So we'll call that PI. That's your principal and interest. And then we know that if we're buying a property for $700,000, at least in Los Angeles, the tax bracket's 1.25%, which means that your monthly payment is right around, again, I'm going to use round numbers, $729, and that will be your tax. Lastly, a loan amount of $630 times 0.3% for your insurance divided by 12 is right around $158 a month for insurance. All right? So now if we add up all these numbers, 4191 plus 729 plus 158 equals a payment of $5,078, all right? And that's your, it's called PITI, principal, interest, taxes, and insurance, all right? Oh, and actually, I apologize, we did forget one thing, which is the mortgage insurance, because you have, like I said, less than 20% down. The way I'm gonna calculate that is I'm just gonna hit the loan amount, this this loan amount right here, with a 0.5%, and I'm going to divide that by 12, which means that my MI on something like this is probably going to be around $263 a month, all right? So I'm going to add that to here, and that's my MI. There we go. And so we have 578 plus 263. All right, so guys, now we have a payment of $5,341 a month. Are we good so far, right? So we've discussed, again, now we're gonna get started. Lifestyle expense, this is just gonna be a straight out purchase, okay? And in here, we're gonna add expenses, all right? So before any expenses, we know that we're trying to buy this property for $700, putting down 10%, loan amount is $630, which using the financial calculator on my website, we can run a payment based on 7% of $41.91. Taxes is in California, or at least in LA, 1.25% of the purchase price of this, okay? And then insurance is basically 0.3% of the loan amount. And then mortgage insurance, I'm hitting this for 0.5%. Okay, and it could be less, depending who's the mortgage insurance carrier. So we're adding all this up, we're getting a payment of $5,341. Now let's get started with the expenses and the income piece, which is gonna be interesting. Now, knowing that the expense for this property right now is $5,341, all right? Here we go. Then we know that basically qualifying ratios for Fannie Mae and Freddie Mac, this is the qualifier, is 45%. So if we use 5341 divided by 45%, we know that this individual needs to make $11,869 a month. This is income to qualify for this payment. Now this is assuming you have no other liabilities, right? Now what I want to do is I want to assume for a moment. Now, mind you, right here, this 11,869 times 12, let's elaborate even more. This person right here makes $142,428,000 annually a year, okay, in income. Just so you can get a very clear picture. Let's assume for a second that you walked onto the BMW dealership, like many of my clients have, and you've decided to purchase a vehicle where the payment is, let's just say $800, all right? Some of these payments run well over $1,000, but let's be conservative. Let's just say you bought that type of a car because you feel like this is important to you. You wanna basically associate yourself with the brand of, you know, Mercedes, BMW. I just wanna show you what it does to you being able to qualify, all right? So now we have 5341, that's the PITI, which is the housing. We're gonna add $800 for the BMW. So now we have 5341 plus 800, which is 6,141. All right? Now, this is the housing, this is the vehicle, right? If we divide this by 45%, which is the qualifier, then this equals $13,647. This is monthly income times 12 is 163,760 yearly income. So basically, right here, and right here. So basically by having this vehicle, okay, by having this vehicle, to qualify for that same mortgage, you basically have to make an additional $20,000 every single year. All right, it's right here, and it's right here. And you know, if you're ever just unsure of how much of your income it's gonna eat up, if you literally just take, I'm just gonna put this out here. If I just take the BMW payment of 800, right, the BMW, and I just divide it by 45%, divided by 45%, you know that this one right here is eating up $1,778 dollars a month of your income. This is how much less income I can use to qualify you monthly when you purchased that vehicle, all right? So I know it's a little tricky, but I just wanted to give you a rundown of, if you're thinking about qualifying for a home, don't go get a fancy car. You're just gonna eat up a chunk of your income. You know, your salary is not gonna jump up here by over $20,000, especially when you're trying to get into this arena. Now, there's other things that you should watch out for, and very basic things. Don't co-sign for somebody else to get something like this, because unless they have a history of 12 months where they're actually the ones making the payment, you're not gonna be able to admit to that. And that liability would be very much the same as if you went and bought that vehicle yourself, all right? So hopefully you got some value out of this video. If you did, please drop me a note in the comments below. Let me know what you've learned. Let me know if you have any questions, all right? If you need assistance getting pre-approved or pre-qualified, you wanna have a conversation about any of this stuff, feel free to give me a call at 818-697-8220, all right? I appreciate you watching. If you like the video, please give it a thumbs up. If you want to see more videos like this in the future, please make sure to subscribe to my channel. Otherwise, I thank you, and I'll see you again on the next video. Take care.